Hey guys, how you doing? This is Rich from Rich TV Live, and there's some big news that came out from Goldman Sachs today. So I wanted to break you guys the news because that's kind of what I do. I like to break you the news and like to break it to you first. So thank you guys for joining Rich TV Live. When you walk into this room, please smash the like button. If you haven't subscribed, subscribe. And if you'd like to learn how to trade, you can join the Trading Academy. Okay, I have a description down below. Floor, you're always first. I really appreciate you. So this is the big news. And it's kind of funny because this is exactly what I predicted. Goldman Sachs warns of imminent risk for stocks due to complacency on coronavirus. That's funny. Isn't that what I said first? Now the largest bank in America is coming out saying the exact same thing that I warned you guys about weeks ago. Stocks look ready to take a breather, and you can blame that on some fresh coronavirus worries. This is an article on MarketWatch written by Barbara Kallmeyer. Japan reported 2 deaths from a cruise ship, and South Korea told 2.5 million people to stay home following its first casualty. I also predicted that we would have deaths all over the world, and it is now starting. May all of the people that have passed rest in peace. I am praying for your friends and your family and for all of those that have this virus. Now, the number is staggering. 76,221 cases, 2,247 deaths, 18,273 recovered. Terrible numbers, terrible, scary, scary, scary situation. And the coronavirus is now affecting 30 countries. There have been 2 deaths on the Diamond Princess cruise ship, which had 634 cases. 1 death now in South Korea, a death in Japan, 2 in Hong Kong, 1 in Taiwan, 1 in France, 2 in Iran, 1 in the Philippines. Terrible situation. Terrible, just terrible situation. I did not get the daily special. I walked into the dispensary and they said that they still don't got it. So they've got my phone number and they told me that they're going to call me when it's ready. But the problem is I got to take my son to soccer practice. So I don't even know if I'll get it today. So I'm kind of disturbed. I went to the dispensary twice and they still didn't get it. And they told me they were waiting for the shipment. Then it takes them 45 minutes to process it, get it into the system. And they said that they would call me when it's ready. Unfortunately, they haven't called me yet. And I don't have the product. So I'm kind of pissed off. I'm not going to lie to you. But it was funny because I was reading this article in the meantime, and they are literally warning on the exact same thing that I warned you guys. Listen to this. So while investors may be tired of hearing about how virus complacent they are, as stocks keep bursting records, our call of the day from Goldman Sachs is saying that exactly that. In the near term, we believe the greater risk is that the impact of the coronavirus on earnings may well be underestimated in current stock prices, suggesting that the risks of a correction are high. Chief global equity strategist Peter Oppenheimer told clients. The virus history books include SARS in 2003, reveal that setbacks for markets are often temporary, but China's economy is 6 times bigger now than it was then, when with Chinese tourism 0.4% chunk of the global GDP, and missed work days in China equal to a 2-month unplanned break for the entire US, he notes. Oppenheimer points to Apple, which was down 1% today, latest warning that Wall Street largely shrugged off, noting that the company has been driving better than expected fourth quarter earning results. During the fourth quarter, the 5 largest stocks on the S&P 500, Facebook, which was down 1% today, Amazon, which was red today, Apple, which was down 1% today, Microsoft, which was down 1.5%, and Google, which was down 0.5%, posted an average earnings surprise of plus 20% compared with just 4% for the average S&P 500 company. Any weakness to these and other companies would likely push earnings estimates lower, cautions Oppenheimer. Don't look to strengthen valuations. Why? What do you do? Why are you searching on my conversation? You don't need to search anything. Don't look to stretch valuations in bond markets versus stocks to immunize against an equity pullback, he said. Not a sustained bear market, but don't hit the snooze button is the message. Last word goes to JP Morgan's top quantitative strategist, Marco Kolonovich, who notes investors have been piling into technology, low volatility stocks, and bonds like gold. Low volatility stocks are gold, driven by coronavirus fears and a passive funds pile into stock winners. As a fan of value stocks, Kolanovich expects a rotation back to asset class once the virus subsides. We caution investors that the bubble will likely collapse, i.e., this time is not different, with valuations reverting closer to 2010 to 2020 average, he warns in a note. Palladium prices have just been going parabolic. Palladium is a key component in pollution control devices for cars and trucks. About 85% of palladium ends up in the exhaust system in cars, where it helps turn toxic pollutants into less harmful carbon dioxide and water vapor, says the blogger. Shares of E-Trade, ETFC, up 21% today. Wow. Are soaring after Morgan Stanley said it will buy the electronic trade platform in an all-stock deal valued at $13 billion. Shipping giant and more airlines have warned over coronavirus fallout. China's new cases rose by just 394 as officials change their counting methodology again. It's reportedly selling control of its lingerie arm Victoria's Secret to take its private shares of Zillow, which was up 16% today, symbol Z, are surging after the online real estate group posted a higher revenue, though losses rose as well. So that's some of the news that is trending right now. And it's kind of funny because first I went out publicly and I've been talking about coronavirus for this will be now my fourth week. And I publicly said that I believe that coronavirus is going to affect the broader markets. Markets have been melting up. I said, hey, I'm a little concerned that the coronavirus is going to affect the broader markets. And now Goldman Sachs, the largest bank in America, is saying the same thing. Okay, guys, it's your boy Rich from Rich TV Live. I gotta go. My phone's blowing up. Things to do. What do you think about this news? Comment down below. Your boy Rich from Rich TV Live, and I'm out. Peace. Told you guys, coronavirus, it's real.